How's it going? Welcome back, it's Jonathan, and in this video we're going to be taking another look at the Bitcoin chart. Now I haven't actually updated you on the Bitcoin chart for around a week now, and there was a very specific reason for that, because I actually wanted to see how the market was going to play out since the last time that I updated and what's actually occurring today. Now I waited specifically for today, and as we can see it is the 18th of November, and if you've been watching any of the last videos and watching the progress of the Bitcoin market specifically, what you'll notice is that the formation, or what some people were referring to as the fractals of the Bitcoin chart, are actually starting to become very predictable. Now obviously I've been trying to, I don't want to say predict, but at least forecast or look into the future on what is going to occur in the Bitcoin chart, and it is very, very simple to look into. Now obviously I don't get it right all the time, but I waited for today because there is a turn date that it was anticipated on the 18th, and I want to go through the last 3 turn dates before the 18th so we can take a look. Now the first one that I was looking for was between the 10th and the 12th, and I put a lot of emphasis on the 12th because I was getting like a clustering of dates, or getting cluster-based analysis that were lining up on that date, so I thought that one would be more significant. And then the other one was the 15th, and then the final one that we're in through now is the 18th. Now like I said last time, I can't give you all the dates in advance because there are people that are paying for these, and it's only, right that they get the information before you, and by the time you publish this video, all the information I talk about would sort of be old. So if you really want to know what's going to occur before it actually occurs, then you got to jump in the groups, and I've left a link below because we've got the groups there. They're all ready to go, and you can jump in today. Now, before I bring up the chart, there is a very, very different dynamic that is occurring right now, and that is the dynamic of people's belief and people's opinions about Bitcoin. A lot of people that I thought that would be interested in this market are no longer interested in it, and a lot of people that I'm talking to that had invested in May, they're no longer in the market, which means that, and we're seeing this in things like the Google Trends, where the Google Trends is like nowhere near what it was back in 2017. I can't remember, maybe you can look it up yourself. The Google Trend for Bitcoin at the moment, I think is around 30 to 40, obviously 100 being like a maximum that it can go, but in the essence of those stats, 100 is only relevant to what has occurred in the past. So if we hit 100 today on the Google Trends, and if you look at this, you just take a look at what's actually occurring. If we hit 100, that just means that it's just meeting par with what occurred in 2017. It's only when 2017 starts to drop down to 90, starts to drop down to 80, and the 2021 sort of searches, they will stay at 100. So it's not relative in the same way that we're thinking. But there is a very different change of dynamic, and that is people that I thought would be interested in this market are no longer. People are dropping out. The run that people are expecting is not happening. In fact, we're looking in some people's eyes, some people are actually saying that what's happening now is actually very similar to what occurred in May. I should say April to May, where the drop-off occurred. They're starting to build some similarities, especially with the market movement that's occurring here and what occurred over here. So do we get this sort of run up, run down, run up, and then we get the lower move into what we saw in May, June, or are we actually going to move higher? Now, those are just some points that I wanted to point out, because it's different. Things are different. This time in 2017, everyone that I knew, everyone would reach out to me and they would say things like, how do I get into crypto? I want to buy Ethereum. Ethereum was big at the time. They all wanted to get in, and these same people, and also people that I'm meeting that jumped in at May, they don't want anything to do with crypto. They got burnt once and they're done. Whereas back in 2017, getting burnt once was okay because it was just running and everyone was talking about it. Different dynamic, and that is why every cycle is the same but different. And that's something my mentors used to teach me. It's the same but different. So using that theory, we can always look into the past for clues as to what may occur in the future, but it's never going to play out exactly the same, and that's why we need to be vigilant with the way we look at the market. Okay, so let's zoom in. What I'm going to do is I'm going to go straight over to the time, because that is what I wanted to do. Which chart did I have that on? I believe it was the price chart we were looking at. So the dates that we were looking, let me get my pencil. The dates were the 10th to the 12th, and then the second dates that I was putting out for people was the 15th to the 18th, okay? Well, I just butchered that up. Can't remember how to write. All right, so let's go ahead and take a look at the 10th to the 12th and then the 15th to the 18th. The 10th did end up marking the top. The 12th ended up marking the bottom. The 15th ended up marking another top. And we're moving down into the 18th now, which is why I wanted to wait until today to see what the market action would be. And it looks like the 17th at the moment looks like a low because of the way that we've got the close on the current bar. I think about an hour after doing this, we're going to get another bar pop up on this chart, which would mean that we've had the market close. So let's take a look. This is how you analyze the market. The 10th marked the top, the 12th marked the bottom, the 15th marked the top, and potentially the 18th or the 17th, the 19th will mark a bottom. Now if the 17th does mark a bottom, that's totally okay. It means that we're only several hours out of hitting a bottom, because I believe it was during the night that the market did hit the bottom and then rallied higher. So that's totally okay. It's nothing to be worried about, but it just means that we need to recalibrate the forecast into next month, because then that means next month might be a day or two out, and we just want to make sure we get as close as possible. But these are the high-low sequences that are possible to do in the markets, and I don't know how else to put it except for the fact that everyone that you know, everyone that you believe is going to be smarter than you, is going to tell you that a theory like this is actually impossible to do. You cannot look at tops and bottoms, and you cannot forecast them into the future. But what I do is I put out these dates, and a lot of people, they contact me after a big rally. Like I had some people reaching out to me like just as the market rallied higher on the 14th into the 15th, but the 15th marked a change of trend, and they were seemingly bullish. You can't, how to say this, you cannot put your opinion on the market in the trading day, okay? So if the market is moving from the 12th upwards, okay? If the market's moving from the 12th upwards and we have the 15th as the next target date, you cannot say that the 14th to the 15th was a change of trend, because we actually went from a low to a high, okay? A lot of people were messaging me here thinking that this bottom on the 14th was the low and that the 15th was going to rally higher. Whereas several hours later, the market hit a top and then it moved lower. Okay, so you always need to take it from swing to swing, swing to swing, swing to swing. That's important. So these swings here, they're all very visible, and we go high, low, high, low, high, low. Now sometimes, not all the time, sometimes we'll get swings like this, and this is the date, the forecasted date. So not all the time can we go high, low, high, low. In bull markets, we get the low to low to low. In bear markets, we get the highs to highs to highs. So all these would be dates that we're waiting for a change of trend. In sideways markets, which I've spoken about many times, we can get the high-low formation. Okay, so that's how we know we're in a sideways market. And I spoke about this a lot when I was forecasting the high lows back in this period, back here. It was just so evident and easy to get these swings and get the dates very accurate on the way out. And then once we started to get dates not changing the market, and we started to get this run higher, there was about 2 or 3 dates in this period here that didn't trigger a change of trend. And then we started to hit the lows. We started to hit a lot of lows until we started to get the tops, and then we could see that the market dynamic changed. This period in here, we sort of had a lot of dates that didn't really do much, and now this period here, we're starting to get our swings again in a sideways formation. So I've waffled on now for about 10 minutes on this, but it's very important. If the element of time is something you're interested in, you need to understand how to interpret the data and how to interpret it quickly, because every day the market's going to be doing something, and you need to know which days are going to be better for buying and which days are going to be better for selling. Now, in my opinion, and hopefully by the time you see this, you can't act on it as advice, my opinion is that in the next 24 hours, it's going to be favorable to buying, because if the date that is going to mark a low, which it looks like it's marking a low now, if this date is going to be of any significance, then it should come in now. And I've spoken about it a lot. When we get these dramatic sell-offs into these dates, you don't want to be selling, you want to be looking to buying. Just as the same as if you get the dramatic rises into the dates, you don't want to be buying, you want to be selling. And that's only if you're some sort of swing trader or you're looking to dollar cost average, etc. You want to be moving in and out of the market on those dates. Now, I don't swing trade, I don't use these dates for that purpose. I use the dates to get an idea on the market, and if I'm going to be taking any more specific positions or wanting to add to my portfolio, I know when to jump into the market. Again, I think I've spoken to you about that 100 times. You want to be jumping in when the dates hit price, pattern, and time. That is the most significant turning points. But when we get dates that don't quite hit the price pattern, it doesn't mean that you can't act on them. It just means that the probability of success becomes lower. So anyway, let's move on. Let's take a look at the Bitcoin chart. I've waffled enough. Daily, looks like what's this one here? This is the 50-period moving average. A lot of moving average people will go ahead and say, oh, it's come down, touched it. Moving average is the reason that the market's changed. This moving average and this one down here, they're lagging indicators. they're not going to tell you what's going to occur in the future. They're only telling you what's happened in the past. And this indicator right here is going to change based on where this close is. Okay, so every single close that occurs in the market, it's going to change its weighting, and it's going to change the line, and it's going to do it based on what's occurred over the last 50 periods. Okay, now this is a simple moving average, which means it's taking the last 50 periods and it's going to average them out. Weekly chart, looking a bit bearish on the weekly chart. A lot of people are worried that we didn't actually get a clear break and close above the last all-time high. I'm still bullish on the end of the year. I think the end of the year I don't think it's going to be as strong as a lot of people are thinking, because the dynamic is not the same. But I still think that we could get close to that 100K mark, and we could do it within the next month. But if it doesn't occur, I am happy to cut my losses depending on where you buy in and which area you actually dollar cost average. So there are going to be losses eventually, but I am happy to cut my losses, keep my profits, and walk away from the market. But in saying that, I think that based on what I spoke to you in the last video, if you haven't watched it, go back and watch it. I think that the ending of November could be a good time period before we get that shift in trend into December. All right, let's go ahead and look at the swings. Our daily is down, our weekly is down, though we have not had a break. And even if we do get a break, it's not a bearish break, it's just simply a higher high break. So we wouldn't put a lot of weighting on it as much as we would, especially if we got this bearish break here. So that pattern there is very different to this pattern here. I don't know if you can see, but we have a high, a low, a lower high, and a lower low. Well, here we have a higher low, a higher high, and then we have a move down. So take that into consideration with a grain of salt. We just need to be watching it. Kaigi chart has turned red on the daily. Again, it's turned red on the daily in the past before reversing. So the move that occurred in the past where it turned red from red to bottom was a negative 14%, but from red to green it was only a 4% change. Price, let's go ahead and just take a look at price quickly. So we've got this high here. I'm just going to pop some price retracements on the chart. Now, if you're not too sure what a price retracement is, it just gives us an idea on how low price can fall in a rising market. And when you use the tool that's a price extension tool, it helps you analyze how far into the future the market can rise. Again, you can only be using this if you're of the belief that markets are predictable, and hundreds of people use these strategies, and I think markets are predictable. So we've got significant resistance definitely in this box still. You know, we're getting two hits from a 38.2 and a 75% level, landing inside the box. So if we did on the 18th, just hypothetically speaking, or even out into the 21st, 22nd, which is another time period I'm watching, if we did reverse into this box, I think it could be another good area to be dollar cost averaging, and that is pretty much a perfect hit with the low that happened in the past. So the market does give us clues into what it wants to do. We just have to try and find a way to analyze it, and analyze it before it actually happens. So regarding patterns in the market, nothing too unusual here. The market is in a sideways trend, and a lot of people are suggesting that it is some sort of Wyckoff distribution method that did happen back in May. But I think people are just now starting to see things, and you know, this is just simple high-low structure. So we have high, we have a low, we have a higher high, and potentially we could be getting a higher low here. So at the moment, it's nothing unusual, nothing to be wary of. We're just simply moving up, distributing sideways, but we're still getting this potential higher low, higher high structure, which could set us up for another higher high moving forward. All right, so we're on the elite wave now. We're getting a lot of price resistance around this 100% level. Now I could go on and add such as the 138.2% level to see where that would take us. Okay, that's too far up. We could change it to 125 to see if that was of any significance. I still think that based on the opens and closes, especially the closes are important, we're still hitting potential resistance around this 100% level, and that 100% level is just a ABC formation from here on the first wave up. So it's normal to be expected that we're going to get at least some form of resistance to the up move. So that's totally okay, and we'll just wait for this one to play out. It hasn't broken anything in the markets just yet. Well, let's take a quick look at the Bitcoin cycles. So the last cycle that we're watching has a starting point of 21st of September. Let's go ahead and draw it in, 21st of September. From the 21st of September, we have a midpoint, which is here, and then we have an ending point for that cycle, which is in December. So a right or left translation, if you don't know already, a right translation is where the market moves higher than the midpoint before moving into a higher low. A left translation is where the market moves into a peak on the left hand side of that midpoint and then moves into a low. Now, when the market moves into a left translation, the low is generally lower than the low that occurred before it, especially the low that we're doing a cycle from. When it moves into a right translation top, the low is generally higher than the low that occurred before it. So that's all we need to be considering. Pretty much, if we had a left translation top, we could be looking at the market declining below this low. But as soon as we get that right translation top, which has now occurred, we are definitely looking for a higher low to occur, and that higher low is going to occur within this December period. So we are going to get the market, rising up, falling low, but that doesn't mean it can't continue to rise up and still give us a right translation top. Okay, so this topping point can happen anywhere between here and here, and I gotta make sure I don't put on any random American accents, but it can happen between here, 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 here. It can happen between here and here. Okay, got that? Here and here and here. Anyway, so the market can really just keep pushing higher, give us a right translation over here, and then move down. And that would be perfectly normal. So nothing to worry about in my opinion, and we'll keep moving from here. Seasonality, November. November is generally speaking a very, very bullish month. Now, that's only bullish in regards to the last 10 years of data, and November in the last 10 years of data posted extremely bullish gains. Now, a lot of people are thinking that the market is going to run rampantly higher, and currently we're down here with respect to where we could potentially be going on the chart. So a lot of people are freaking out, but don't worry. In the last video I did point out, just go back and watch it. I did point out that November has a slow start. It has a slow start until generally the third week, and then once it's done that, once it's pulled back into the third week, it can scoot higher. So we're just waiting, and we're trying to find those lows that are going to shift the market dynamic. But I don't know if we're going to get the same change that we're all expecting, because I've already said a lot of people that you thought would be in the markets are not in it. There's a lot of new people, there's a lot of institutions, but there's not a lot of people around us, unless you're only putting yourself in circles of crypto investors. If you don't put yourself in circles of crypto investors, you'll know that a lot of these non-crypto investors are saying that they've lost money in crypto, they don't want to go back into it. These are people that bought in May. And or that the risk is too high and they don't think it's worth their time. We're meant to be 2 months out from a boom. Now, I remember it was definitely 2017 time. It was the September to October period that I was getting the phone calls, I was getting the text messages about China, how to jump in. It's not happening. It's not happening. So this time is different, and all that means is that the potential for these $250,000 calls, you have to remember that institutions, when they sell at the top, they need someone to sell to, and they generally sell to people like you and me, the average retail investor. If there's no retail investor to sell to, then they can't exit as easily at the top unless they're selling to themselves, but they can't sell to themselves because they're all trying to sell. So $250,000 Bitcoin, I don't think that's going to happen. Some people are calling it, and they're saying that it's built into the Bitcoin price. I mean, it could happen. I can't write it off, but I don't think that it's the same dynamic as it was in 2017. So we need to be changing our tune. Now, I'm not going to go too far out, but I think that there's very significant resistance around the 99,000 mark, and also there's very significant resistance around the 150,000 mark. I think if anything, the sub 100, so we're going to rally potentially into almost what's going to be 100, and then all going to get all the 150, $200,000 calls, and a sub 100 I think could be on the cards, and if it does breach that, then potentially max 150. Happy to change my opinion as the market unfolds, but just based on what I know today, that's just what I'm seeing. Okay, so let's move on. Bitcoin squares, perfect hit. So look, I wouldn't be too, I think the 17th has marked the low and not the 18th, which is okay. I'm happy to be a day out. I'll recalibrate that moving forward, and we'll see if we can pinpoint some dates in the future from here. The fact that it's come down, hit a 220-degree angle, and posted a reversal almost exactly. This might have been a hidden angle that a lot of people missed, and it could be one that might be moving us up from now. But I have to watch the 22nd to 23rd. That is an important date for this month, and I want to be watching that. So whether we come up for a day or two, then back down and post a higher low, or even a top wouldn't be good, but a higher low would be nice. We definitely need to be watching that, because we've got 2 more turn dates into the end of the month, and I need to see how they're going to play out. So I need to start building a case now, so I can see what the next 2 turn dates, which is going to be 7 more days, and then maybe like 10 more days later. And I won't go into the exact date, but I've given you, an idea on what to look out for. Anyway, there's nothing else that I have to share with you today. Those are just some of my thoughts, and I wanted to wait till today for that specific reason of trying to capture the low. Just to summarize again, I think the low is in. I think at least the low that was expected on the 18th, I think that's in now. I don't know if the market's going to reverse from here. And I just hope that you can maybe find some success in these, opinions or even these ideologies that I share with you, because it's definitely different to what a lot of people are sharing with you. And if you look at the information that these guys at 2-3 million subscribers share with you, it's all overhyped crap. It's all mooning opinions. It's all get rich quick. They have a very different target market. I'm not trying to appeal to the people that are looking to moon. I'm trying to appeal to the people that are really wanting to, change the mindset around how they analyze the markets and get an edge that you're not going to get from these big high-end players. So that's all I have. If you enjoy any of this, like, comment, subscribe, and I really do look forward to talking to you maybe next week.